Time now for another edition of Trade Talk, and our next guest is going to give us a few picks that he thinks have the potential for share buybacks as well as larger dividends. For more, we are joined by Rob Edel, Chief Investment Officer at Nicola Wealth Management, joining us from Vancouver. Rob, great to have you with us, and I'd love to go right into your stock picks, and I'm curious as well as we do that, what's your overall outlook? Have you been risk on?
Yeah, I think, we run pretty diversified portfolios, so equities traditionally haven't been a large part of our clients' portfolios. But, given what we're seeing in the U.S. economy, we're actually a little bit more optimistic. I think that what we're seeing early part of this year could have been expected with the payroll tax increases and the sequestration. But we think in the latter part of the year, you're going to start to see some more improvement in the housing market and better employment numbers. So, we're more optimistic.
So, Rob, on that front then, one of the stocks that I see you like right now is CitiGroup. Talk to us a little bit about that. Is that a nice play on the housing market recovering and or what else?
Exactly. I mean, obviously all the banks will benefit from a better housing market. CitiGroup, as most of the banks, have assets and mortgages that have been under a lot of stress, and they'll be able to release more of their reserves as the housing market improves. As well, CitiGroup, has a very strong presence in Latin America and Asia, which gives them a lot of growth that some of the other domestic banks don't have in the U.S.
Rob, do you think Citigroup is past the point of having really noisy earnings? And it's always been the problem trying to figure out the company on earnings day. They're sort of all over the place with all kinds of stuff that they're bringing back and putting forward and lawsuits. But are we past that point now?
Yeah, it's a great question, Patrick. Probably I would say not, but I think that the positives are going to start to outweigh the negatives, so that you should start to see, they have built up a fair bit of capital, and we think that should continue, and we see some real positive catalysts that hopefully will overshadow any negatives you would see in the near future.
Rob, moving on a little bit here, technology has definitely lagged the market. You've got one of the stocks here, Qualcomm, that plays into Apple. Talk to us a little bit about the fundamentals in terms of why you want to step in and own it now.
Well, I mean, I think, you said it, Catherine, that, technology has sort of been left behind, and you've sort of seen that with Apple, which, we think looks attractive here as well. But, Qualcomm is in a space that we really like, which is in the smartphone area, that they, with their royalty business and licensing part of their business, they gain from no matter which company, is making the higher sales. So we think that they're going to benefit from continued smartphone penetration in the U.S. and globally.
Sorry, Rob, question about Qualcomm. How important is the LTE deployment in Europe for this company? I continue to hear that Europe's behind. They're not deploying as fast. Is Europe going to be a really big bump for them?
Yeah, I don't know, Patrick. I would say that, since they have such a dominant share, they certainly will gain from, increased, penetration in LTE. But, I think that they have enough other things going for them that even if that is slower, and it, eventually is going to happen, that, you're going to see that translate into higher earnings in the future.
Rob, also, in terms of the cyclicals, we've seen a lot of money move into cyclicals over the past 2.5 weeks. A nice play in the chemical space there, according to you, is Lyondell. Why is that the one?
Well, I mean, so the chemicals, I mean, we like the, we're looking for exposure for the shale oil and gas play in the U.S. and in the manufacturing renaissance in the U.S. But chemicals is the one area that we see a short-term play, and for someone like a Lyondellbasell, they really do benefit from lower feedstock and higher ethylene margins, and this is going to result in very attractive free cash flow to the company. They're very shareholder friendly. They've announced plans that over the next 18 months to buy back up to 10% of their stock, as well as they pay a very nice dividend. So we think it's an attractive space right now.
In terms of, it used to be in the PE chemical business that it was Saudi Arabia was going to build these massive plants and basically dominate the world. Do you think that with what's going on with the Marshalla area, that they actually have a competitive advantage versus Saudi Arabia?
So from what I've seen, I think that you know, the Middle East still has a cost advantage, but it's certainly narrowed a fair bit. But you know, and I think it's more relative to some of the other competitors, and being domiciled in the U.S., where you're starting to see that competitive advantage, and the build out of the petrochemical industry that was, anyway, haven't seen growth in the U.S. for years.
All right, Rob, we're going to leave it there. Thank you so much for joining us on Market Sense.
Great, thanks.
Thank you. Rob EDEL'S, Chief Investment Officer over at Nicola Wealth Management, joining us from Vancouver.